The new Bitcoin ETFs are likely only days away from holding more Bitcoin than the GigaChad himself, Michael Saylor, and his company Microstrategy. If you come for the king, you better not miss. Plus, President of Argentina, Javier Milei, abolishes taxes on Bitcoin transactions. Elon Musk chooses to exit, and Biden declares Bitcoin mining's energy usage a federal emergency. Let's get into it. Welcome to the Friday, February 2nd edition of the Bitcoin ETF Daily Show. I'm Dante Cook, head of Swan Business. In this show, we discuss the latest news, events, winners, losers, and key information surrounding these historic Bitcoin ETFs. Here at Swan, we're on a mission to educate the world about Bitcoin. So please like this video and subscribe to the channel to extend our reach and help us cut through the noise on YouTube. The ETFs are likely one day away from holding more Bitcoin than MicroStrategy, with over 170,000 Bitcoin in total. For Thursday, February 1st flows, the inflows are pretty light overall, with total flows for the day coming in at about $38.5 million. BlackRock was our inflow winner with over 120 million more than Fidelity yesterday. Also, for the first time, IBIT surpasses GBTC as the trading volume leader with more than 300 million traded. This might be because BlackRock, although the most corporate, has done the most with creative marketing to gain the attention of new investors. Check out this new ad that they just ran. In other news, we want to give a shout out to Valkyrie for being the first Bitcoin ETF fund to diversify their coins by partnering with BitCo as another custodian for their ETF fund. Mitigating counterparty risk is a core tenet of the Bitcoin ethos. We also experienced a massive sell-off from Bitcoin miners, who sent over 173 million to exchanges, and the biggest sell-off since May of 2023. And look at what impact this had on Bitcoin's price. None. The 170 million wasn't even enough to outweigh the inflows in ETFs alone. And here comes our opportunity to zoom out. Keep your eyes on the ball, like you're catching a punt.
Man, you don't know what you're talking about.
Publicly traded miners unanimously grew in share price performance, efficiency, production, and hash rate to a staggering degree in 2023. And many believe that publicly traded Bitcoin miners are undervalued, given that the ETF market has created a new tailwind for transaction fee revenue, as miners have a new wall of liquidity that will enter the market from these ETFs being traded. In other news, ever since he made his presence known at Davos, Javier Milei, president of Argentina, has fired 50,000 government employees, deregulated legal tender laws, and just yesterday, abolished taxes on Bitcoin in his first 50 days. As a follow-up from yesterday, Elon Musk is deciding to use his power of exiting. He's voting with his actions by seeking a vote from shareholders to move Tesla's headquarters to Texas from Delaware. Speaking of Texas, Texas is the Bitcoin mining capital of the world. And just yesterday, Joe Biden declares Bitcoin's energy usage a federal emergency. Well, it's because Bitcoin is winning. Let's take a step back to talk about Bitcoin mining. For those of you who are less familiar with Bitcoin, a Bitcoin mining machine is simply a specialized computer that is finding the correct nonce for the production of a new block. And they do this over and over again until a hash appears that satisfies the network's requirement. And then they're rewarded for their work. This is a block reward. Bitcoin mining organizations, like any other data processing organization, buys electricity to meet these power demands. They have an incentive to find and buy the cheapest power they can because it improves their profitability. So naturally, the cheapest energy that can be found is energy that is not being used or paid for when everyone else is trying to use that same energy. That's why over 60% of the power in the Bitcoin network uses renewable energy sources. Compare that to the global number, which sits at just 15%. Here's an example of how Bitcoin miners using wasted energy creates a win-win-win scenario. It's a win for energy producers, it's a win for the environment, and it's a win for Bitcoin mining organizations. Bitcoin miners are actually using methane gas or flared gas, which is a byproduct of the oil production. When oil producers have to get rid of this methane gas, they flare it off into the atmosphere. So Bitcoin miners partner with these energy producers to capture that methane gas that otherwise would have polluted our environment to power their Bitcoin mining operation. This creates a revenue source from revenue that they wouldn't have otherwise had through Bitcoin miners. There will be blood, anybody?
I drink your milkshake.
Bitcoin mining also generates economic growth for local communities. There's many more, but here's just one example. CleanSpark, a publicly traded Bitcoin miner, partnered with the government in the local town in Sandersville, Georgia. And since then, they have lowered energy bills and lowered property taxes while bringing revenue to the city and the town that otherwise wasn't there. And I'm sure we've all heard of this story. Bitcoin miners partnering with ERCOT. ERCOT provides electric power to over 26 million people in Texas. Bitcoin miners have worked with ERCOT to better stabilize their grid. So, in times of peak demand, or let's say when they have a snowstorm, or something happens when people need more energy, the Bitcoin miners are able to very quickly turn their machines off and provide more power back to the grid. Contrast this, an example, with other manufacturers or other infrastructure providers who will need a steady state of power and are unable to turn off the machines that manufacture all of the cars. You're not able to shut down an assembly line in a car manufacturing plant in seconds when the people need the energy. The cars have to keep getting produced. That's why Bitcoin miners are better for energy grid stabilization. Plus, they're a purchaser of power when that power is not at peak demand. Bitcoin is actually going to help society rely less on fossil fuels moving forward because we can profitably build infrastructure without creating tax credits or driving us further into debt, which we don't have to go into that. When we look back over the last 15 years, what has been the total impact in the world of ESG? Has it actually reduced carbon emissions? What has it actually done to bring us together versus divide us? As though the world is just made up of two groups of people, people who care about the environment versus people who don't. Now compare ESG to BTC, which is actually reducing carbon emissions, which is actually creating a shared platform that everyone in the world can use. It's bringing hope and prosperity to people who wouldn't otherwise have it. And since we're talking about energy, it's allowing us to finance infrastructure projects for energy in a sustainable way. If Uncle Larry has stopped using the term in favor of BTC, then maybe you should too. Be sure to tune in on February 6th at 10 a.m. Eastern, where the man, the myth, the legend, Swan CIO, and head of Swan Mining, Hafa Seguri, will be on Cafe Bitcoin, our daily Twitter Spaces show. He'll be talking about Swan Mining Live for all of the world to tune in. Make sure you're following the Swan Media handle on X and set a reminder so that you get a notification and won't miss it. With that, we're signing off for the day. Happy fracking and happy stacking. This is Dante Cook with Swan.com. We'll see you next week.